Hello and welcome to the ECB preview for the September 4th meeting. This is a very much anticipated meeting from the ECB today, as they are expected to make some sort of traction towards asset purchases in the Eurozone as the inflation expectations in the Euro area continue to crumble, hitting record lows just a couple of weeks back. This has prompted markets to accelerate their expectations of imminent ECB action, and it's seen that the ECB have roughly three broad options, of which they could employ in order to combat inflation and in fact disinflation in the euro area. First of all, they do have traditional monetary policy on the cards, and a minority of analysts do expect the ECB to make broad-based cuts to their three major rates, that being the main refi rate, the marginal lending rate and the deposit rate, which of course currently stands at historic lows of -0.1%. However, other tools that could be employed in the traditional monetary policy theme could be the rate at which TLTROs are operated above the main refi rate. Now, that spread was originally set at 10 basis points above the main refi, but that could be cut to a zero spread, which would likely see an incremental uptick in the demand for TLTRO funds come the first and second operations in September and December, respectively. But markets were looking out for any hints towards unconventional monetary policy, which could range from as significant a program as full-blown sovereign QE purchases. Nonetheless, these are highly unlikely due to the political and legal ramifications that come alongside sovereign QE. So this would be against the treaty struck between the Eurozone members quite some years ago. So full-blown primary market government bond purchases by the ECB would require a treaty change and a significant turnaround from some of the member parties such as Germany, who have opposed direct help from the ECB, as this of course would be tantamount to monetary financing. As such, a more likely option is the type of purchase in the form of asset-backed securities. We have already had consultants on the case, as the ECB hired BlackRock, as announced a couple of weeks back, to consult and put together a report and a recommendation in regards to just how an asset-backed securities program would work from the ECB. So the ECB have been saying for quite some months now that a transparent and simple asset-backed securities market just simply doesn't exist in the euro area. As such, the onus is on EU governments to create such a market in order to have an effective transmission of monetary policy through ABS purchases. As such, many analysts do expect that such ABS purchases could be begun in relatively small volumes, with all market focus turning to the quantity, the quality and the duration of such an ABS program that could be employed by the ECB, as this could tick higher as the depth of an ABS market does continue to increase due to EU regulation after the ECB pressure. One of the biggest risks, though, for the ECB is actually disappointing the market, as they've already prepped up some pretty easy conditions. We've seen the euro fall alongside Eurozone government bond yields, which pretty much on average sit well below their US counterparts. As such, any reversal would be pretty damaging to the monetary transmission mechanism in the euro area and could in fact put the ECB's credibility at risk as they continue to miss their inflation target, not just in the past couple of months, but in fact in the past couple of years. So the risk of an unwind in one of the most popular positions since the start of the year, that being short euro dollar, could potentially see a very swift and potentially violent reversal should ECB's Draghi disappoint the markets tomorrow, if he does not at least promise to take swift action against deflation expectations. So we'll see the full rate decision at 12:45 London time, where historically this is also where they've made statements that further monetary policy tools are to come, before the press conference at 1:30, where we'll also see their latest projections, where inflation and growth are both expected to be cut back pretty dramatically in their latest round of forecasting from the ECB economists. So of course we'll bring you all those releases as soon as they hit the wires, as well as any other relevant commentary to your trading. But in the meantime, that's all from me. Have a fantastic ECB release.